Good morning, everyone. It is December 5th at 6 a.m., so half an hour before the market's going to open. And yesterday, we started to get that downward bias, that pullback that we've been anticipating. At least we did in the QQQ. SPY is still relatively flat. So let's see if we have a continued downward bias for today. Take a look at our futures, and we are down. NASDAQ is about 0.4-ish%, 0.4%. The Dow is about quarter, and then the S&P 500 is about a third. So we are somewhat significant, leaning towards significant side on the NASDAQ especially. So let's take a look. Let's go from the very beginning. Let's start with our dollar, US dollar, see how we're doing. And we did break through that MA 200, but we are recovering with a little bit of bounce. We'll see how high that can get because we're right at that MA 200 and EMA 20. Once again, those levels shouldn't mean too much in the dollar index. I really should remove these moving average lines when we're looking at the dollar index. So these tend to trend. And if this is a bounce, then that should trend back upwards. And that would make sense in the context of where the market is going. It also means that we've been enjoying this, which is deflationary. If this starts to bounce back up, we may see inflation start creeping back up again instead of going down, in which case the Fed is most likely to continue raising rates. This would be very much against what the bond market is predicting, and that would start putting a lot of pressure on the bonds, and then that would put a lot of pressure on stocks. Let's take a look at our bonds, TLT. So far, still going up along that EMA 8. Very steady, strong uptrend over here. So until we see a break in that, we're just going to assume it's going to continue. And it looks like in the pre-market, we are up, a bit of a gap up, actually. So that should be positive for markets, for the equity markets. S&P 500, as we already saw, it was down a little bit. I guess we don't need to go over that again, so we can just look at our day trading levels. Actually, before we do that, let's take a quick look at the economic calendar. ISM servicing index, sort of, maybe that will help us get a clue on inflation and in the services sector. The services sector is not doing well. Services in the United States are 60 to 70% of our economy. So this is a big number in terms of our economy, and it could have some moving power in the market today. That's about half an hour after the market opens. So we'll want to watch that. I wouldn't expect a huge movement, even on when it's the big focus. It doesn't tend to move markets a whole bunch, but it can introduce volatility into the market. So that would be about half an hour after the open. Let's see if we have any earnings tomorrow or today. Okay, nothing too significant. We've got Chewy, that's somewhat bigger. GameStop, a lot of people still follow that. I don't know why. And then let's go tomorrow before market. Campbell's Soup, that'll reflect on staples. Okay, so sort of earnings. We'll pay a tiny bit of attention, but we're not going to expect it to really move markets. Campbell's might move the consumer staples market, but it won't really affect the entire market. All right, so now we can go and look at our day trading levels. Yesterday, we came and we bounced off that Monday low, and then we traded higher from there. But because we gapped down so much overnight, it wasn't enough to overcome. So we still had that down day. Today, we are once again opening near the Friday low. So we'll want to watch, especially after that first half hour, which direction we go in. And let's draw another line in this area of consolidation right here. I guess it really should be this area of consolidation. So we'll do right there. And so we want to see if it's going to go up, we want to see it break through this level and then start moving up here. If it bounces around and then breaks out, that's a good chance that it'll end up higher today. Otherwise, if we bounce around down here and then break, Monday low is somewhat important, but if we break at the previous low on Friday, yes, Friday or Thursday, if we break Monday's low, then we're very likely headed towards that Thursday low. And if we break that Thursday low, then we're going to get a really strong pullback in the market. I don't really anticipate that right now. So far, all we've really been seeing is sector rotation, not giant pullbacks. So it seems like, I could totally eat these words, but it seems like this particular pullback is going to be fairly mild. So I'm not going to look for a lot of shorts inside of this market. I'm going to start realigning my portfolios to the upside. They're already aligned to the upside, but I'm going to start closing out profitable shorts, removing hedges unless they still make sense in my portfolio. So the old hedges, in order to quote unquote make them make sense, I would refresh them because those were based on hedges of last week or levels of last week and based on my portfolio last week. So you would want to refresh those hedges. So close out your old hedges, open new hedges if you feel like your portfolio still needs to be hedged. Other than that, everything is looking pretty quiet. The things of significance, just to highlight again, is that in this S&P, we're trading sideways, but we haven't hit that +1 ATR yet. So there is room for it to keep on going, maybe even down to EMA 20 if we get a stronger pullback or if a really strong pullback back to this aqua line. And then the QQQ, we did already trade through that +1 ATR all the way to the EMA 20 yesterday, but we rejected, we bounced off of it. So that there is a decent chance, I would call it 50 to 60% chance that this was the bounce. This is the pullback, and that will bounce from there, especially with this particular candle that we got yesterday. If we didn't have that candle, then I would call it about closer to 50-50. But because of that candle, we do have a slightly higher chance that this is the bounce, and we'll start heading higher from here, in which case there's a very mild pullback in the tech sector only, and then we'll move higher, which also means limited upside for the remainder of the year. And then once we get that limited upside, we would expect a stronger pullback near the beginning of the year, and that would set up the rest of the year for a possible bull rally. Okay, I think that's going to be it for today. We could take a look and see if some active stocks for trading. So we've got Tesla, QQQ, NVIDIA is probably pretty hot right now. Yep. I would take a look at NVIDIA. You can see that it's not really following the same shape as, for example, Tesla or the S&P. So NVIDIA is trading as its own entity at the moment. Let's take a look at maybe like Marathon Digital. Crypto was really hot yesterday. They had huge gap ups yesterday. So it's not surprising that it looks like we're going to pull back a little bit, but this could keep going. This could keep going easily. So I would be paying attention to Marathon Digital Holdings as well. All right, so that's it for today. Nice and light, not a whole lot to look at this particular morning. We just really need volume to come back into the market for us to really get directional. If that volume never comes back and it doesn't come back for the rest of the month, then we'll just keep on chopping sideways. So have a wonderful day, have a wonderful trading session, and I will see you in the